Thank you so much, Pedro, for introducing information about Olympus. Next is going to be our panel. So the topic of today's panel is investing change. Firstly, I would like to invite our moderator of the panel, Francesca Conti from Outlier Ventures Program Manager.
Hi, everyone. Welcome to the panel today. We'll be discussing investment trends and what's in the game for and in store. We're waiting on one other face to join us. That should be right now. Hi. So I'd like to introduce our panelists today. We have Leeor Groen from Spartan. We have Kevin Williams, who's joining us from Sats Ventures as well, John Riggins from UTXO, and Peter Yang from Fenbushi Capital. So I've had the opportunity to work with these gentlemen on a number of deals through Outlier Ventures, which is the world's leading and largest Web3 accelerator. So let's get to it. Obviously, we're on the ground today, a lot of excitement going on in Nashville, and we've been having our eyes closely on innovative technology. So ordinals and ruins have been the forefront of that respect. So I'd love to get a take from our panelists here and what they see in the space and where they're seeing the innovation and hype at the moment. So Leeor, do you want to kick off?
Yeah, hi everyone. Great to be here with you. Spartan Group, we're based out of Asia, but I'm actually between Zurich and New York. And really, I think the main takeaway from the event so far, beyond all the political drama that's happening across the road at the main conference,
we'll get into that.
We'll get there. I think has really been the extent and scale of the developer activity, right? Building on Bitcoin as a concept. We've had the first Bitcoin Builder conference also happening across the road, and a kind of gateway here that we have with the ICP network. And seeing the number of people who are not only turning up for Bitcoin 2024, but also excited about being at the event itself and actually open to the idea of developing and using for Bitcoin more than just a store of value asset. I think this is really the inflection point that we're seeing in the industry, and super excited to be here.
Yeah, Kevin, I'd love your take on that as well. Seems like you're biting at the chomp.
Hello. Okay. Hey everyone, Kevin from Sats Ventures. Unfortunately, my picture is not here, but I totally agree with you, Leeor. I think about 2 years ago, when I first started investing into the Bitcoin space, primarily in stacks, the Bitcoin L2 stacks, there really wasn't that much activity. And now we're seeing a ton of layer 2s, we're seeing a lot of scaling solutions, and we're seeing a lot of builders coming back to what everybody considers to be the mother chain in Bitcoin. It's an extremely exciting time, capital's flowing in, and I truly think we're just kind of at the beginning of a lot of these companies' life cycles.
Totally agree. And I'm with UTXO Management. We're asset management arm of BTC Inc., which is putting on this conference. So it's great to welcome everyone to Nashville. I would say that one thing that's different this year from past events in Miami the last couple of years is that it's tended to be kind of a gathering point for the crypto industry, even though it's a Bitcoin conference. But really, this year is the first year that each ecosystem, if they're doing side events, if they're hosting developers to collaborate on things, the focus is still Bitcoin. So bringing not just developers from other ecosystems into Bitcoin, but other ecosystems looking to kind of take advantage of the current Bitcoin community and see how they can integrate better. So I think that's a positive development.
Hey guys, Peter from Fenbushi Capital. I guess all the panelists have already covered as much, but I guess I can add a little bit. If we're focusing on Bitcoin specifically topic, in previous cycles, I would say most of the Bitcoin related raises were either around payment or minces, but over the last cycle and the current cycle, I think we're starting to see a lot more applications related to Bitcoins. So it's kind of interesting that applications are not only built on, say, like Ethereum or other protocols, but now with Bitcoin, especially the Bitcoin L2s, we're seeing a lot more adoption through applications instead of just using Bitcoin as a form payment.
Now, gentlemen, I'd love to get your take on this because Kevin and I know we've spoken about this a number of times in the last 2 days, that anecdotally, teams I've been meeting with have really high valuations, some of which don't have much to show for it, to be quite honest. So a tweet of yours saying that he's seeing all these scaling solutions with 40 FDV and nothing really to show for it. So is that what we can expect? Is that the new norm, or are we breaking away from that?
That's a great question. I think what we've seen is the launch of the very initial Bitcoin layer 2s. I won't mention their names, but when they finally TGE'd, it was the expectation of some of these companies reaching multi-billions in FTV. And it was also in the same moment that the market took a little bit of a downturn and some of these FTVs kind of went sub 1 bill. And when that moment happened, I think a lot of the Bitcoin layer 2s that were trying to achieve a 300 mil FTV raise in their second round started to kind of question if they could do it or not. And then I think because of that, it's kind of set this weird precedent that these new layer 2s that were coming into the space that were trying to compete can start out at 30, 40 mil right away when they didn't have anything other than a pitch deck. And I specifically tweeted that because I was seeing so many layer 2s. I know we've definitely seen like maybe 60 or 70 new layer 2s that's trying to come into the picture. And because they're starting to see these new layer 2s TGE, they're seeing the valuations being so high, they're trying to start out higher to try to match that. And it's really, really difficult as an investor when you don't have anything to justify such a high valuation at such an early round.
Right, right.
Yeah, those dang companies not letting us get in cheap anymore, right?
So long are the days, yeah. So long are the days of that. And then something else I want to get into a little bit, because I think we would be remiss not to bring this up. So we're all located geographically a little bit different, but the four of you are focusing on funds or projects that are primarily Asia-centric. I mean, is that where we should really be looking to deploy capital? Or are we still holding out hope for the other areas of the world to transpire? I mean, where should we be double-downing on our efforts, and where can we find the most promising founders?
So I guess it really depends on what you're kind of looking for. Asia, if you're focusing on projects built there, a lot of focus have been on speed and how fast you can execute, where the focus on scalability and longer term solution might not be as critical, where you'll see that happen kind of exact opposite with projects based, especially here in the US, where you have a big idea with a big market is much more important, and you have the luxury of time. With projects being built in Europe, typically, they're more of the low-hanging fruit type, just because the barrier to entry and regulatory conditions is much more favorable. But we haven't seen too many projects out of Europe that have grown to scale globally. But with development in, say, like developing countries or places like Africa and South America, you're seeing a lot of the previous cycles where those applications have proven there's demand and application. A lot of the markets in those developing regions are using kind of a local native way to tackle the same problem, but through a different method. So, yeah.
Right, that's really interesting and a great point. And John, I know you're based in Hong Kong as well. Not sure how long you've been based there, but would you agree to that sentiment as well, that we can see a lot of new things popping up in that region, and that was a strategic decision for UTXO, or?
Yeah, I think that's would generally agree with Peter's comments. I'm based in Hong Kong and decided to spend more time in Asia because of some of those dynamics. But we do have partners in the US, and I'd say we've done about 45 investments over the last year, and it's probably like 70-30 non-Asia, Asia. Is what we're seeing. But yeah, me being on the ground in Hong Kong, seeing kind of how fast the teams are moving over there compared to here, it's definitely kind of jarring for people who aren't familiar with the Asian market yet. So.
For sure. And Leeor, I know you're based in Switzerland, if I'm not mistaken, but you're primarily Asia focused in terms of your investment thesis as well.
Yeah, well, actually, I think big distinction here would be the regionality of that is not linked to where we're based. So we have our offices in Singapore and Hong Kong. We definitely consider Asia as one of the growth engines of adoption, especially when you look at number of users and people who are actually not only mobile native, digital native, but also effectively becoming crypto native, which is, again, how we measure the long-term adoption cycle in the industry. That being said, we do acknowledge with the caveat that in these situations you have to follow the money, right? And there is no overlooking the fact that the US is the largest capital market many and most of the largest funds, not just in the Bitcoin ecosystem, but in Web3 as a whole, are based and domiciled in the US. And even with the unfavorable or unclear regulatory stature here, many entrepreneurs gravitate to and still have a root linked to the ecosystem here. And I think one good example is Stack's founder, Munib, who was just on the stage as well about 10 minutes ago. Again, New York-based, and I think that there's the idea that you can have a leg in all markets by having the right team structure and design, but ultimately for builders and so forth, people follow the money, and that tends to be here to the US. And there's a reason why we're meeting here, and Bitcoin events annually take place here.
That's a great point. And speaking of regulation, getting into the next topic, because it would be remiss if we didn't bring up former President Trump speaking tomorrow. Obviously, that's going to be well attended. And Senator Loomis, according to Fox Business, will be proposing legislation that she's hoping President Trump will put his stamp of approval on. So speaking of the regulatory landscape and knowing where the four of you are based and what you're investing in, is this really something that we should be doubling down on? Like, is this going to be a chasm for regulatory landscape, and what can we expect? Are you waiting in pins and needles, or you feel like it's not going to affect projects too much in the future? John, you're looking at me. Go ahead.
No, I'm just excited for Saturday. We're ready. Being kind of on the inside of some of these conversations, I'm just excited for what comes from Trump and Lummis. And I think that what we see pretty quickly is just a total. We're going to see just total competition between nation states after Saturday for who's going to be how they're going to adopt Bitcoin, not just as first was ETFs, now at the nation state level. It's just going to totally change the game. So I've been in Hong Kong the last few weeks, and every day I'm getting asked about Trump and what he's going to be announcing, what's happening there. And I know that the central bank, PBOC, they're going to be watching the live stream, and they're going to be ready to make moves kind of coming right out of that. So I think it's this kind of nation-state level competition that just totally changes the game for the industry.
Yeah, and Peter, I'd love to get your take on that as well, because I know you work with a lot of later stage companies. So do you feel that they're signaling to you that there's cause for concern in terms of the regulatory front, or they're shielded from that?
So it really depends on which segment of our portfolio. So for our US base, it really depends. So whether it is companies that does like tax preparations or anything that does with large institutions, definitely. They have much more, let's say, sensitivity towards the regulatory side of things. But, regulations are written by people. They can change as well. Even as someone who was pro-crypto, such as Gary Gensler, he can become very against crypto. So from our side of things is, we try to control what we can, and then, for the rest, we try to be as supportive as possible. So with Trump, I believe he will be favorable and help out with regulations, but I guess how that will affect the general industry is still kind of to be determined.
Yeah, we're all waiting on pins and needles, I think, so we'll just have to wait for that to come about. But, signaling more institutional investors and people who are speaking out on that. Recently, Larry Fink, in an interview to CNBC, gave his stamp of approval and said, Bitcoin is legit. Now, Leeor, I know that Spartan is run from former GS employees, if you will. So I would love to get your stance on the traditional TradFi and what you think of a seal of approval. I mean, is this something that we've been waiting for, or do you really feel we don't need that?
I think anyone who thinks we don't need that is kidding themselves as well, right? So ultimately, we certainly do need a common understanding of what this thing is, right? And today, I mean, especially at a Bitcoin conference, it's very easy and clear and intuitive to the people here because we're already drinking the Kool-Aid, so to speak. We've come here, we've turned up to Nashville because we're excited about it and what it represents. The fact that you have, presidential candidates now not only endorsing aspects of the industry but turning up to speak at these events, says a lot more about the trajectory of the industry and it becoming a political issue. And ultimately what that does is creates the space and the mind share for people to actually get involved and engage in the space. And I think I've come from earlier the conversation with Michael Saylor, where he was obviously one of the giga chads of Bitcoin hoarding, so to speak. His ability to do that is directly attributed to Wall Street's appetite and institutional capital's appetite to give this industry a go. And I think the mindset that has come with is, for any of the people to be right that have entered today, there has to be a continued and sustained path for people to get involved in this industry and continue for the momentum to go. And that stems all the way from the way in which mining occurs. And again, when we talk about applications, which I'm sure we'll come to, and where we're focusing on the investment side, mining for the last few years has been one of the biggest concern topics, because with the hash rates halving every halving cycle, we go through the same conversations of how are we going to finance this, how are miners going to self-sustain, and somehow we've always risen to the challenge. And the reality is that can only happen with continued institutional adoption and buying, and I think that mindset is really where everyone today that's come to this conference should have an understanding that, yes, we still want trustless, sovereign, the ability to sit outside of central banking, money printing mechanisms, but at the same time, for that to be effective and adopted globally and fulfill its promise of what we've set out to do, that requires the buy-in from the global capital market as well. So we cannot separate the two, and I think we're kidding ourselves if we think we can.
Yeah, that's a great point. I mean, I would agree with you that to fall by the wayside and say that we don't need Wall Street's stamp of approval would be pretty remiss. And Kevin, I saw you nodding your head as well. Would love your take on this.
Yeah, I think a lot of startups are at the phase now that they're trying to figure out a way to kind of onboard institutions into their application layer, or trying to figure out ways that they can participate in TVL campaigns, et cetera. And I think it's been really difficult because they didn't know how they could approach these institutions. And I think one of the first and kind of forward-thinking institutions, maybe someone like Franklin Templeton, who's been making investments into the space very clearly. And we've got great startups that are building RWA on Bitcoin, startups that are looking to kind of build out liquidity pools, but are looking for institutional players to come in and support, and they just had no idea that it was even possible. So the fact that we're having this conversation now and that there is institutional kind of interest is the most exciting component of the Bitcoin space,
Right.
in my opinion.
Yeah, no, I agree completely with you. Again, it gives the final nod of approval, if you will, to keep continuing and moving onward. And I think very much that's a great signal to startups that this is a feasible prospect, that you're not building in a microcosm, if you will, that there's actually real-world adoptions and use cases that could be implemented. John?
Totally. And Franklin Templeton, kind of came in a little bit under the radar. I don't think it's got enough attention, but the way they're making moves with BitLayer and others, I think is super significant. Yeah, totally. We, at UTXO, we've also try to take advantage of kind of the mismatch in other capital markets also with the MicroStrategy playbook. So Japan is one we did recently with MetaPlanet in the market there, reacted very favorably. So I think that the kind of MicroStrategy model in other capital markets is something to watch this cycle as well.
Peter, any thoughts?
I think all the other panelists have covered pretty well. I'm not too sure what I can add anymore.
Fair enough. We're all in agreement there, I suppose. Something that I would be very keen to hear from four esteemed investors is the pitfalls and maybe where you've gone wrong in the last year. I can start with myself because I feel it's always a way and an uncomfortable topic. So when Outlier Ventures was seeking the best projects building in Bitcoin, I believe that when we were speaking to founders, we weren't aggressive enough. So we saw really interesting projects that we confidently felt, okay, these founders will be good with our terms 2 months' time. Well, I can tell you we lost a number of good deals in those 2 months and realized from those mistakes to be more aggressive in our prospects. So we started looking at projects September of last year. And many of which have gone into great success. We have one of our portfolio companies in the audience, Andy from Loca Mining, who is friends with some of the panelists here. And so I would have loved to have seen us invest in more asset issuance projects, because one of which, Ordinox, that actually a number of us have invested in as well, has really proved to be a fruitful investment. So from my perspective, that's something that we could have been more aggressive about and are continuing to do so now to make up for that. But would be keen to hear from our panelists if there's any potential pitfalls or things they've experienced in the last year. Don't be shy.
Yeah, it's just the ones that you missed out on, right? And
Sure,
I think
yeah.
probably more so than moving slow, just thinking that valuations were a little bit rich on certain deals, a year ago that look pretty cheap now. So not being bullish enough,
Right.
I guess, on Bitcoin development cycle initially for us.
Actually, I'll go the other way here. So I think, of course, it's easy in hindsight on the ones you've missed out on that do go on to do well. I do think that there's been a lot of deals and the copy-paste projects that have come through, got financed, and I think people will be nursing some wounds on their portfolio over the next 3 to 5 years when you look at the deals that were executed now. And the reason I say that, obviously some will do very well and want to encourage everyone to go out and kick some goals, right? But reality is, I mean, we started analyzing Bitcoin layer 2s meaningfully last year, and we led the Blockstack, now Stacks ICO back at that time it went to market in 19, launched in 2020. So we've been long-term looking at the Bitcoin ecosystem as more than just a financial asset, really a technology that can be built on as a chain, a version of a chain. Going from that analysis in last year, we published a report called the Bitcoin Layers Report, together with the Stacks Foundation actually in December, where we tracked 50 layer 2s, or sidechain / layer 2s. Now we're tracking over 200, let's say as of middle of this year. And I think that exponential growth of the number of people building in this space, fantastic sign and signal in terms of people see an opportunity, let's go for it. At the same time, we're looking at the number of deals that are getting funded on what would arguably be, close to undifferentiated ideas in an industry which, I'd like to think that the industry is servicing 7 billion people. I mean, or 9 billion people. We're not doing that yet, realistically, right? It's still a very small group of people. And this cycle, frankly, hasn't really seen new investors coming back, right? It's still existing crypto investors who had bought during anywhere between 17 and 2022, and we're still kind of re-engaging that existing user base. So if I'm very critical, I would say there's a lot of copy-paste projects who are opportunistically growing, and of course that's where I think it gets hard to understand who is doing what and why they're doing it. And the real test for me will be, over the next 3 to 5 years, which of the projects that were founded and funded in the last 6-12 months are actually still there and got meaningful traction. Because I think there's a lot of people who probably won't be around, at least in the projects they're currently working for. And we really do need to find something which is better than, this exists on Ethereum, this exists on Solana, let me pretend to try to do it on Bitcoin, because most of those things don't work and frankly won't work.
Yeah, I mean, I could take a perfect example. I've worked with a number of projects that thought they could just do the copy and paste method, and it doesn't work. Why doesn't it work? Because they're fundamentally different. The mindset is different. Users that are on different applications just completely differ from one another. So just doing the copy and paste over is really not doing it justice. And maybe, Kevin, you can impart some advice to founders that are looking to engage and get in this space, because I myself am not a founder. I'm not brave enough, and I don't have the chutzpah to do it. But in terms of what you're seeing, what knowledge or what can you input on founders that are looking to build and make themselves differentiated in the space?
Yeah, I think one of the first things is founders really need to understand the investor landscape. I think this is one key mistake that a lot of founders make when they're approaching their very first raise. They may not know specifically who the investors, who the Bitcoin native investors are that are in the space, and they don't make space for Bitcoin-focused investors. And I see this happen quite a bit, and I think it's a pretty big mistake. So if I see a company that's raising very early, that maybe hasn't had a conversation with UTXO or even Spartan, now great to see you on stage as well, Peter. But if like some of these funds are not there and are not having conversations, it makes it really hard for me, because it makes me kind of question if the founder really understands the kind of investor makeup that's going to be required for them to have the support long term. So I think one of the first things that I want founders to do is look across the landscape and really understand who the Bitcoin-focused investors are. If you're building on Bitcoin, you want these people in early, and you want them to be in your corner, especially when you're building on the chain that they're specifically focused on. And that's a benefit for founders, because you have access to other portfolio companies of that investor who are also specifically building on Bitcoin. So it makes it easier to build partnerships with these other companies, right? It makes it easier for them to introduce you to other investors who are also focused on the Bitcoin ecosystem. So I've been seeing this more and more recently, and I just hope that founders really understand that there are Bitcoin-focused investors. We do exist, and that they do reach out to us first to get in earlier in the round so we can support them.
Yeah, that's an interesting perspective, and that's something I've imparted on founders I've worked with too, to not ignore that and make sure you're being strategically aligned from the get-go. Because to reach out to traditional investors with a Bitcoin angle, it doesn't really work. So if you're building something early on, you want those key strategic advisors that are going to guide you in the way and introduce those burgeoning relationships with others. John and Peter, I don't know if you feel the same or you have different advice to impart.
I totally agree. I think that's a good point. Come to us first. Let us help it out. But yeah, just the kind of brand names that you've wanted on your cap table in the past. Us up here and kind of the people who spend all of their time looking at Bitcoin are going to be a little bit more insightful and helpful here initially.
I think I'll probably take like a step back, but for founders, I think most people when they're starting out, they don't realize that ideas are cheap. Having an idea doesn't mean you're the best person to build it. So I think before going out to investors, I would highly suggest build out the founder network first, to iterate your ideas, to go through a process, ask other founders how they've been through, say like pitching investors, building out their network, how they found product market fit. Because when you're pitching to investors, especially big ones, usually only have one chance. And most investors don't really want to listen to the backstory. They just want to see like the perfect picture. But if most of startups is very ugly, especially in the early days, and you don't want to waste that chance. So I would say test your ideas first with other founders, then go to investors like us. So it makes the process much more smoother.
Yeah, certainly it makes it more smoothly and more succinct and unified in that messaging. I mean, I'd be also curious to hear from you what you've been hearing on the ground, if you've been at the main conference or side events. I've heard, again, a lot of political talk from everyone from my Uber driver to founders to while I'm waiting for my drink. But what are you seeing on the ground that entices or excites you? And what is, the impetus moving forward and where you see real innovation lying? Leeor.
Yeah, happy to kickstart us. I mean, I think the point that everyone here is here for a reason, and the fact that we even have a Bitcoin developer-oriented conference now is like side events is unimaginable 12 months ago, frankly. And I think that other layer ones, partner ecosystems, and chains like ICP are wanting to work with and building that transition, seeing niches and opportunities there. Says everything we need to know, right? So I think a lot of the opportunities now are moving beyond the copy-paste ideas, but one of the other big revelations from the week for me was a project called Bitcoin OS, which launched and announced their first zero-knowledge proof on Bitcoin mainnet, which was done on Thursday, right? So these are kind of technological shifts and developments that are milestones and kind of pioneering of what is possible on the Bitcoin blockchain, because even thinking about that 12 months ago, again, would have been completely unimaginable. And if you were able to do it 12 months ago and you announced it at the main conference, people would have laughed you off the conference saying, you're ruining Bitcoin, basically fuck off, frankly. And I really think that mindset has fundamentally changed. And we're seeing entrepreneurs now really push the boundary. I mean, tech teams that have been building for years, literally. And I mentioned Blockstack from 2019 intentionally because we kind of get carried away with this mindset that, we now have these new ideas and layer twos that are emerging. What do we have to show for it? And we default to go, what is the TVL? What is the FDV? And these are metrics that, of course, matters to investors. I'm not going to underestimate that. But really what we're talking about now is actually bringing native utility to Bitcoin itself. And I still think that foundational principle of being able to have a independent central bank, that's what, for me, Bitcoin is this independent central banking institution, which can now not only be a financial institution and platform, but really also be a technological layer. And we're seeing that really happen now with breakthrough tech, with things like zero knowledge on Bitcoin directly. And I think that's really exciting.
Yeah, zero knowledge is so hot.
I just love the fact that there's conversation and there's interest. The fact that there's conversation with people that don't know much about Bitcoin in general, just asking about Bitcoin. I was in an Uber on the way here, and the Uber driver just asking like, so do you get taxed if you sell your Bitcoin? And it was just like a really funny conversation, but the fact that she never bought Bitcoin. She never engaged with Bitcoin in the
Yeah.
past. And she's interested in just learning, for
Sure.
people that are here. So it's really awesome that we're just having conversations with everyday people, right? People that are just now, maybe whether it's from the political side of things, trying to understand Bitcoin, getting interested in it. And it was so different, right? I always think back to a year ago in May, sorry, we got 38 seconds, in Miami, at Bitcoin Miami, how different it is now than it was then. Even the Ordinals conference, there was like nobody there. So I'm just really happy kind of where we are in the life cycle of things now.
Yeah, I think one thing we have seen this year in terms of like participating companies, sponsors, and people is the number of tax people is ramped up again this year. Typical of a bull market, helping you avoid your capital gains taxes here in the U.S. So a lot
That's
of interesting
real.
strategies, a lot of interesting strategies being pitched here this week.
Peter, any final thoughts?
Yeah, I mean, I guess to make it short, this cycle seems like with more L2s and more different chains, there is definitely fragmentation with user base and liquidity. But at the same time, I think it creates a new opportunity, and since that competition is relatively less, so it allows more people to experiment, to push the boundaries, and do things that otherwise they probably don't have a way to in, just because barrier entry is too high. So for me, the opportunity seems like maybe we can make some re-innovations that previously didn't work, but this cycle we can try to make it happen.
That's what we can hope for. So thank you, everyone, for our panel. And you guys will be around for a while if people want to chat, myself as well. Thank you. Bye.
Thanks.
Oh, it was fun.